In the year 2026, brands no longer distinguish themselves solely through innovative products or advanced supply chains. The crux of competitive advantage has shifted to an intangible but potent force: the narrative. The field of narrative economics, brought to global prominence by the Nobel laureate Robert Shiller, frames narratives as engines of economic significance. Stories circulate through societies like viral agents, shaping consumer sentiment, investor perception, and ultimately market behavior in ways that transcend rational calculations of price-to-earnings ratios or quarterly returns. The transformation in company valuation underscores this shift. No longer do analysts fixate on classic financial metrics alone. Instead, they account for the narrative premium, the additional value attributed to a company's projected story. A brand seen as a pioneer in artificial intelligence or as an advocate for the circular economy commands faith from stakeholders independent of immediate performance. This effect is visible in the way certain companies maintain robust capitalization, even during market turbulence. Their narrative serves as a belief anchor, creating a protective moat against volatility. The crafting of resilient brand equity demands not only that the narrative be compelling, but that it exhibits unwavering consistency across every channel and platform. This is narrative consistency, the engine behind the formation of what could be termed a trust moat. When the supply chain, customer service, marketing, and the public declarations of executive leadership all reflect a unified storyline, the brand transcends its status as a mere commercial entity. It becomes the hero in an overarching societal or cultural narrative, a badge with which consumers identify. This elevation from product to symbol is the central mechanism by which equity becomes resilient, resisting imitation or disruption from competitive advances. However, the strategic complexity intensifies when distinguishing between viral narratives and fleeting trends. Trends are ephemeral. They spike and recede, driven by novelty or transient cultural noise. Viral narratives, by contrast, possess the traits of contagion. They tap into foundational human emotions or resolve collective anxieties that echo through society. Modern strategists deploy epidemiological models to track these narratives, calculating their contagion rate, or R-naught, the expected reach per narrative carrier. Marketing investments, therefore, are increasingly allocated on the basis of a story's proven propagation characteristics, maximizing the odds that it will become self-perpetuating rather than withering as a spent fad. One perennial challenge for practitioners is quantifying the impact of narrative, the ROI of storytelling, in traditionally hard numbers. In 2026, developments in sentiment analysis and narrative attribution enable organizations to dissect the portion of customer lifetime value traceable to narrative alignment, rather than to discount-driven transactions. Consistent storytelling shows measurable benefits: reduced churn, elevated customer advocacy, and reduced acquisition costs as satisfied customers become conduits for further narrative dissemination. Storytelling, long derided as soft, emerges in economic analysis as a hard driver of financial outcomes. At the macro scale, narratives exert outsized influence over entire economies. The dominant societal narrative, whether of scarcity or abundance, crisis or opportunity, can induce the very market realities it describes. A pervasive fear of economic decline can trigger consumer retrenchment and investment freezes, hastening recession. Conversely, a narrative centered on technological possibility can unlock widespread optimism, fueling expansionary behaviors among both firms and households. For the vigilant brand strategist, understanding and engaging with these prevailing market narratives becomes indispensable to long-term relevance, allowing the brand to counteract pessimism or leverage emergent booms as the context demands. Thus, in the intricate markets of 2026, narrative is no longer peripheral. It is the axis upon which brands turn. The architecting of narrative, the fostering of consistency, the science of viral propagation, the quantification of its return, and the engagement with macroeconomic storylines collectively define the highest level of strategic competency. A brand that masters these dimensions secures more than market share. It achieves cultural permanence.